Let's get straight into a look at the markets picture in Kenya now, recapping on trade as it played out yesterday. First, Kenya's stock market soaring of 4% by the close of the session yesterday, extending a two-session surge after a largely peaceful presidential poll outcome that has encouraged foreign and local investors alike. We had the NSE 20 share index rallying to just under the 4,986 point mark, as you can see there, a new 4.5-year high, which was last touched on July the 22nd, 2008. Some of the biggest rises in the index were Equity Bank, which is the country's biggest bank by customers, the main electricity producer Kenyan, and then retailer Uchumi Supermarket, whose shares all rose more than 7% by the close of the session. This, while on the currency front, the shilling firmed against the dollar to close at 85.35 to the greenback. As you can see there, we've got a stable unit coming into this morning. Traders saying that we've been seeing flows from the tea sector coming through, and that acting as support, while demand has been lackluster. The shilling did not react to that MPC decision in Kenya, which came through later on in the session, to hold the key interest rate for the first time since July 2012, as it buys time to assess the state of the economy after the election, whose outcome will be challenged in a court. Remember, we had all 11 analysts and traders polled by Thomson Reuters having said that they expected the central bank to hold its benchmark rate. So that decision hardly coming as any surprise. Let's get into some analysis now with Ted Macharia. He's an investment analyst over at AIB Capital. Ted, thanks so much for joining us this morning. So that decision from the MPC being made yesterday, rates being held steady, and as I said, hardly surprising, where we had all 11 analysts polled by Reuters having expected that. Your reaction to that decision yesterday?
Morning, Alishia. As you've said, the central bank, through the Monetary Policy Committee, decided to hold the CBR at 9.5%. The Monetary Policy Committee adopted an inflation targeting agenda when inflation was runaway in the first half of 2012. We've seen them rein down inflation that is now at about 4%. The inflationary pressures going forward are very real. We're expecting depressed rainfall through most parts of the country, which has a ripple effect on food prices. Global oil prices are going up. We have an increasing current account deficit, and electricity tariffs are expected to be revised upwards. So those inflationary pressures would mean that the central bank would need to adopt a small wait-and-see strategy as we wait for the political situation to evolve. Basically, the central bank is saying economic stimulation is primary, inflation targeting is secondary.
Yep, well, certainly that seeing very little reaction by the shilling. As I mentioned a little earlier, we had the shilling rising yesterday and holding pretty steady. When it comes to the movement on the equity front, a little bit dramatic, not entirely related to that rates decision, but more so the optimism that's filtered through to the markets post-elections. Ted, what are you making of the kind of rally that's being witnessed on the NSE 20 index right now?
It was expected, but as you said, it's very dramatic. We've seen in the past 2 days about 6 or 7 counters touch the 10% maximum ceiling. And it's across various sectors, particularly banking and insurance. We've also seen Kenyan join in and gain about 9% on 2 days running. So generally, it's the local institutional investors who had, in a way, shied from the bourse just before the elections, and they're coming in with that renewed confidence and the optimism that is good for the bourse.
As you say, it's largely those earnings reports out of the banking sector that's managed to excite investors in a big way. Also, those dividend payouts that they've put on the table, enticing investors in a big way. When it comes to the results seen yesterday, Access Kenya out with numbers yesterday, posting a 62% rise in profits. One would assume the market's impressed with those kind of results.
The market has been very impressed. Access Kenya has gained upwards of 50% in the 3 months to now. That is from January. Investors were very optimistic about new internet connections. They posted a 62% growth in profit before tax, which resulted in a 30% earnings growth. However, revenue has grown very slowly at about 8%, and that might be a little bit worrying going forward. But all in all, demand on Access Kenya still remains high at its current price.
What are some of the challenges this company faces? Because as you've highlighted, their revenues increased 9% to 1.9 billion shillings, and the company says that's despite lower average revenue per user, while per user income coming in. But surely that is a challenge and a possible risk that sits on the horizon, Ted.
Access Kenya has continued echoing its optimization drive, saying that cost cutting is the primary agenda, although they are still focusing on increasing their network. And that has been reflected in their performance in 2012. We've seen their costs come down substantially. Revenue has gone up a little bit by 8%, and most of the new connections are corporate connections and SMEs. So that in itself is a good thing. Obviously, Safaricom and Telkom Kenya have a good share in the internet business, particularly in mobile internet. So competition is high, but there's room for all the players to grow into.
Your assessment of Access Kenya's muscle in order to compete against players like Safaricom?
Safaricom is pretty big. In fact, there have been very many rumors going on for a very long time about acquisition talks between Safaricom and Access. But they're playing on different fields and in a way supporting fields, in that Safaricom gives most citizens a good entry point into internet on a very cheap mobile network, and then you can maybe upgrade. However, Safaricom is also looking to expand its data business, so it might want to invade the corporate space that Access currently enjoys.
Yep, so that's
so we'll have to wait and see how.
Yeah, that's exactly right.
We'll wait and see how
we've got that competitive landscape shifting pretty aggressively right now. It's just as aggressive in the financial space, Ted. Just let's quickly throw forward to some of the results expected out in the next couple of days. Results anticipated out of Standard Chartered Bank and then Diamond Trust Bank as well. Your broad expectations on those fronts?
Standard Chartered Bank is expected to do upwards of 30% earnings growth based on earnings up to the third quarter of 2012. The same applies to DTB, although DTB might be a little bit lower than Standard Chartered in terms of growth in earnings. The two of them are they have very high quality loan book, and they are invading the asset financing business very well. DTB is obviously on a regional expansion path, and it'll be good to see how the bank negotiates cost containment and growth through the region. Generally speaking, with the market trading at a current PE of 12 and the banking sector at a PE of 9, with insurance at about 5, the two sectors are very prime for picking up very good shares, in that they are very cheap. And as far as earnings have come through, we've seen the banking sector do on average about 20% in earnings growth, which is better than the manufacturing sector and the other sectors.
So putting motivation on the table for investors, Ted, would you be vying for the big cap players more so than the mid-tier caps right now, or do you see the opportunity presented by some of those mid-tier players as well?
I think the mid-tier players right now are trading relatively cheaper than their actual fair value. If you look at KCB and equity, liquidity is very high, so it is more likely that their current trading price is indicative of market sentiments. If you look at smaller cap banks like National Bank of Kenya, we've seen it trade on relatively thin volumes, and it's trading at, for instance, a PE of about 3 compared to KCB at a PE of about 9. So the mid-sized banks are the ones that have a lot of upside potential.
Well, let's leave it there.
But all in all, it's good in the sector.